Hi everybody. Uh, so I have shared with you this exercise question. I think you have read these questions. This question gives you a list of business transactions. Business transactions means the thing that have been done by a business. There are like 20 business transactions. So and then at the end of the question asks you to prepare or to show the effect of each transaction on the accounting equation, and then you have to show the general journal entry for each business transaction. Okay, so let's see how to answer this question. So this is the question, and then the question asks you to show the effect of the transaction on the accounting equation. So first you have to know what is the accounting equation. So accounting equation is this one. Asset is always equal to liabilities plus equity. Okay, this is the accounting equation. Okay, in accounting we use this equation always, all the time. So this equation, so the first thing is you have to know what is asset. The simple definition of asset is resources owned by a business. You have a business, resources owned by your business are called assets. The simple example is the typical example cash, account receivable, supplies, and then equipment, land, building, motor vehicle. Okay, the second thing is the liability. Okay, what is liability? Liability means obligations or something that a business has to pay in the future. So the typical example of liabilities are account payables, and then bank loan, and this one, the last one in the accounting equation is the equity. Equity, the simple definition for equity is amount owned by the owner of the business. Okay, remember in accounting, the owner of the business and the business are different entity. So amount owned by the owner of the business in the business is called equity. Equity is related to at least 4 accounts. So the first one is the capital. Okay, remember. And then second thing that is related to equity is the drawing. And then number 3 is revenue. And then the last one is the expenses. Okay, always remember, equity is related to 4 accounts: capital, drawing, revenue, and expenses. When you put something into the business, it is called capital. When you take something from the business, it is a drawing. When your business sells something or provide services, you will get revenue. And then when your business operate, you have to pay expenses like salaries, utilities, rentals, etc. Okay, so the accounting equation is asset always equal to liability and plus equity. Okay, so that is about the accounting question. The second thing that the question asks you is, so this is one thing. The second thing that the question asks you is to show the general journal entry for the transaction. So to do the journal entry, you have to know the format for the general journal. So the format for the general journal is like this. You have to write the date, and then you have to show the debit account, something, and then you have to show the amount related to the transaction, and also you have to show the credited account bank or anything, and then you have to show also the amount related to the transaction. Okay, this is the format for the general journal. Okay, this is the general journal. And then if you want to do it properly, you have to write the explanation related to the transaction. Okay, you have to write the explanation. Okay, to do the general journal entry, you have to remember the rule of debit and credit. Okay, because you have to debit an account and also credit an account, so you have to remember the rule of debit and credit. So the rule of debit and credit is like this. Debit means left, credit means right. Debit means you record in the left side of the account. Credit means you record in the right side of the account. So the rule of debit and credit says something like this. If there is an increase in asset, you have to debit the asset account. If there is a decrease in asset, you have to credit the asset account. For the liability, if there is an increase in liability, you have credit the liability account. If there is a decrease in liability, you have to debit the liability account. For the equity also, if there is an increase in equity, you have to credit the equity account. If there is a decrease in equity, you have to debit the equity account. So you have to memorize this rule. Always remember this rule. Okay, then if you can remember this rule, then you can do the journal entries. Okay, now let's see this question. Okay, the first question. The first question says, to make it easy for you to do this, you have to imagine that this business is your business. Okay. In this question, Mr. Razak is the owner of Sure Clean Enterprise, which involves in cleaning services. The following are a few transactions occurred during the year 2017. So you imagine this is your business. So in accounting, the owner of the business and the business are different entities. You do the accounting record for the business, not for the owner of the business. You do the record for the business. When we say asset, it is the asset of the business, not the asset of the owner of the business. Okay, so let's see this one. Mr. Raza invested 50,000 cash, 150,000 property, and $70,000 van into the business. So what happened here? So this is Mr. Raza, or this is the owner. This is you, the owner of the business, and this is the business. In this business, there are asset, liability, and equity. Okay, so what happened when the owner of the business invested these things into the business? So it means that the owner take something from his pocket or from his own belongings and put into the business. So first the owner put the cash, and then the owner put the property, give the property to the business, and then the owner gives the van, or put a van into the business. So what happened to the business? When the business get these things are asset. So the effect of this event on the accounting equation of the business is like this. So the accounting equation is asset equal to liability plus equity. So the first thing that happened is when the owner of the business invested 3 things into the business, the asset of the business increased. The assets are, the first asset is the cash. 50,000. And then also the asset property also increased. Property increased by 150,000. And then asset van also increased by 70,000. 3 assets increase. Is there any effect on the liability? No, the business does not owe anything to anybody, so there is no effect on liability. And on the equity, there is an increase in equity. What are the things that increase in the equity? The equity, the name of the account is account capital. Capital are the things that the owner of the business invested in the business. So capital has increased. What is the value of the capital that increased? The value of the capital is 50,000 plus 150,000 plus 70,000. So capital has increased by $270,000. So you have answered the first question. You have shown the effect of the transaction on the accounting equation. So this is the first thing you have answered. Now the thing that you have to do is the question asks you to show the general journal entry. Okay, so remember the format of the general journal. First you have to write the date. The date is 1st of January. Then I have told you have to know the rule of debit and credit. So here asset increases, 3 asset increase. So remember, asset increase you have to debit. So in the journal you have to debit the account cash. Debit account cash 50,000. And then second asset is property. So debit account property 150,000. And then the third asset is the van. You have to debit asset van or motor vehicle 70,000. So you have recorded all these 3 assets. And the second thing is there is an increase in capital. Remember, if there is an increase in capital, you have to credit the account. Sorry, the increase in equity. When there is an increase in equity, you have to credit the account. So increase equity, the account is capital. So credit account capital. Credit account capital, the amount is 270,000. See, this is the general journal. If you do not write the explanation, it is acceptable, because most of the time when you show the debited accounts and credited account, people can understand what happened. Okay, so this is the first transaction. So let's see what happened for what is the answer for the second question. Okay, the second question. The second transaction is on the 2nd of February, the business purchased a set of computer from Juju Jaya's neighborhood 5 5,000 by credit. Okay, so you have to show the effect on the accounting equation. Asset, liability plus equity. Okay, how to know the effect? So always think about this. Okay, this is your business. This is your business. In your business, you have asset, liability, and equity. And then the business purchase a set of computer. So this is the supplier. The supplier name is Jujaya. Okay, Jujaya. So what happened when the business purchase a set of computer? So the thing that happened is the supplier will send the computer. Something goes into the business. And the business has to pay something to Jujaya. Okay, see. So when this thing happen, the effect on the accounting equation is asset has increased. Asset of the business has increased. Before this, the business has no computer. Now the business has a computer. So asset increase. The name of the asset is computer. The amount is 5,000. Okay, then there is a second thing that happened. The second thing is the business purchased this computer in credit. In accounting, so in credit means the business owe some amount of money to the supplier. So it is a liability. It is something that the business has to pay in the future. So liability has increased. In accounting, when a business owe money to to another party, we record in account payable. Okay, the name of the liability is the account payable. So the amount is 5,000. Okay, and then there is no effect on liability on equity. Okay, so now you have to do the second thing required by the question. You have to show the journal entry. So journal entry, first you have to write the date, 2nd of February. See here, asset increase, so you debit account computer. The amount is 5,000. And then there is an increase in liability. According to the rule of the debit and credit, liability increase, you have to credit. So credit account payable. Okay, you have to write the name of the supplier. Jujaya Sendrian Berhad. The amount is 5,000. Okay, remember, when you credit an account, you have to show the account a bit in the left. When you credit an account, you have to show the account a bit in the right side. Just same like this. These accounts that you have debited, this is an account that you have credited. So you have to make it a bit in the right side. So this one is also a bit on the right side. Okay, this is the general journal entry. Okay. Now we see the third question, the third business transaction. Okay, the third business transaction is this one. The third business transaction is the business purchased a set of washing equipment from Equip is Berhad, 4,000 by cash. So what is the thing that happened to the business? This is the business. This is the supplier. The supplier send the washing equipment, and the business pay cash to the supplier. The name of the supplier is Equip A. Okay. So what is the effect of that on the accounting equation? Asset equal to liability plus equity. Okay, now See here, there is no equipment before. Now the asset equipment increase. There is an increase in asset. The name of the asset is washing equipment. Okay, washing equipment. Okay, washing equipment. Washing equipment, the amount is 4,000. 4,000. And then at the same time, there is a cash goes up because the business paid by cash. So asset cash decrease. Asset decrease. The name of the asset is cash. The amount is also 4,000. No effect on liability. No effect on equity. Okay, this is very easy. So now, how to do the journal entry? Journal entry is like this. The date is 3rd of February. Asset increase, you debit. So debit account washing equipment. The amount is 4,000. And then asset decrease, you credit. So credit account cash. The amount is 4,000. See? Okay. Very easy. This is the journal entry. Okay, now see the next transaction is this one. Okay, the last transaction in the first page is this one. Okay, on the 4th of February, the business purchases cleaner equipment from Clean AA Sdn Bhd, 1,000 by cash and 3,000 on credit. So what is the thing that happened to the business? When the business purchased the cleaning equipment, the equipment goes into the business. So the effect on the accounting equation is asset equal to liability plus equity. So the thing that happened to the business is increase in asset. The name of the asset is cleaner equipment. The amount is, the value or the amount for the cleaner equipment is 1,000 plus 3,000. The value of the cleaner equipment is 4,000. And then when the business purchase the cleaner equipment, the business pay 1,000 cash. It means that 1,000 asset cash goes out from the business. So the second effect on the equation is asset decrease. The name of the asset is asset cash. Asset cash decreased by 1,000. At the same time, the company still owe the creditor 3,000. When the company owe the supplier 3,000. When the company owes somebody, it is a liability. So liability increase. The name of the liability is account payable. The name of the supplier is Clean AA. Clean AA Sdn Bhd. Okay. The amount is 3,000. There is no effect on the equity. Okay. So how to record this in the journal? Okay, to record in the journal is easy. Remember the rule of debit and credit. So see here, asset increase, you debit. So when the date is 4th of January, 4th of February, and then there is an increase in asset. So the name of the asset is clean equipment. The amount is 4,000. And then there is a decrease in asset cash decrease. Asset decrease, you have to credit. So credit account cash. The amount is, you have to write it a bit in the left side, in the right side. The amount is 1,000. This one, 1,000. This 1,000, and then here liability increase. The rule of debit and credit says you have to credit. So credit account payable. The name of the business is Clean AA, Chandrian Berhad. The amount is 3,000. Okay, this is the general journal entry. See, the amount in the debit side always equal to the amount in the credit side. This one debit 4,000, credit 4,000. This one debit 4,000, credit 4,000. So in the first transaction, debit 270,000. So this one I have to put one more zero. And credit 270,000. This one debit 5,000, credit 5,000. Okay. So this is the first. Now we have a second. Now we have the transaction related to purchasing of supplies. Okay. So in this course, our focus is on the on service businesses. So we do transactions related to purchasing of supplies. A service business does not have supplies, does not have inventory, because a service business does not sell anything. So a service business has supplies. Okay, see. First, what is the effect on asset and liability plus equity? Okay, so supplies. The business purchases supplies from Fibris Berhad at the price of 1,000 cash. So what happened? When the business purchases the supplies goes into the business. So this is the business, and this is the supplier. The supplier send the supplies into the business. So supplies are asset. At the same time, the business pay cash. So what happened to the asset? First, for this transaction, the asset supplies increase. There is an increase in asset supplies. The amount is $1,000. $1,000. At the same time, the business pay cash. So there is a decrease in asset cash. The amount is also $1,000. Is there anything happen to the liability? No. Nothing happened also to the equity. Okay. So how to do the journal entry? Very straightforward. Asset increase, you debit. Asset decrease, you credit. So the date is 5th of March. Increase in supplies, asset supplies, so you debit account supplies. The amount is 1,000. Okay, and then decrease in asset cash, so you credit account cash. The amount is 1,000. Okay, so this is the answer. Okay, now see the second transaction. The second transaction is on the 6th of March. The business purchases supplies from Fibris Berhad at the price of 5,000 on credit. So what happened to the accounting equation? Asset equal to liability plus equity. So asset supplies goes in. So there is an increase in asset supplies. The value is 5,000. And then the business purchase on credit. So the business owe money to the supplier. So when the business owe money to the supplier, there is an increase in liability or debts. The name of the account, remember we record in account payable. And then you have to write the name of the supplier. Here the name is Fibris Berhad. Okay. So the amount is 5,000. Then you do the journal entry. Very straightforward. Asset increase, you debit. Liability increase, you credit. So you write the name of the date of the transaction, 6th of March. Debit account supplies, 5,000. Credit account payable. The name of the supplier is Fibris Berhad, and the amount is 5,000. Very straightforward. And then you have another one. Okay, see here, 7th of March, the business purchase supplies from Fibris Berhad. The price is $1,000 cash and $5,000 credit. So how to do that? So we do the first thing first. Asset, liability plus equity. What happened to the asset? When the business purchased the supplies, asset supplies increase. Asset increase. The name of the asset is supplies. Supplies is total is the value of the supplies is 1,000 plus 5,000. So 6,000 supplies. When the business purchased the supplies, first the business pay 1,000 cash. So when the business pay 1,000 cash, cash goes out from the business. Cash goes out from the business. So asset cash decrease. Asset cash decrease by 1,000. But and also at the same time, the business owe 5,000 to the supplier. When the business owe to the supplier, the liability increase. The liability increase. The name of the account is account payable. Name of the supplier is Fibris Berhad. The amount is 5,000. Okay. No effect on the equity. No effect. Here there is no effect on equity also. So now, how to do the journal entry? Okay, asset increase, you debit. Debit account supplies. The date is 7th of March. Debit account supplies. The amount is 6,000. And then asset decrease, you credit account. The account cash decreased by 5,000. And oh, I forgot. Okay, another one is liability increase, you credit. So credit account payable. Account payable. The name of the supplier is Fibris Berhad. The amount is 1,000. See?